higher time. Come on. Come on, man. Okay, so we're live. Let the YouTube editor load up here quickly. Alright, that's not working like I anticipated it to work. Hey guys, everyone that's watching on YouTube. We've already talked a little bit about what has been going on today. We still have 15 minutes before market open. I'm already in a position, as you can see, and because I already explained it to the VIP members why I entered short here at the low and not up higher, catching the perfect swing top. And yeah, I'd say we get started talking about that a little. And if you have any questions, feel free to send a message either in the Discord chat for the VIP members or the YouTube live stream chat for everyone that's watching today for free. So guys, cool. Kita, Chasers, SMC Dungeon. If you have any questions, Bongo Rumbo, Fady, feel free to ask. So what happened this morning? This morning, I woke up late. I stayed up too long, reading my book, not getting away from it. And yeah, I woke up roughly around 9:30 my local time. So that's 3:30 a.m. New York time. And I already saw, okay, some price action. We took the Asia session low and the Asia session high. Rejected off our new day opening gap here to the upside. Paired with the volume imbalance. Interesting. Then I wanted to see if we can break below this unfilled volume imbalance. And I also made sure that I let everyone know. So guys, I mean, if you have access to the tape reading chat, make sure to take advantage of it. We've been on a streak so far in 2024. Where is it? Right here. I mentioned that did I miss anything yet? Because I, like said, woke up late at 9:43. Then I looked at the chart and the only thing I saw is, okay, we're below midnight. We have that unfilled volume imbalance. We have relative equal lows and we have plenty of inefficiencies to be filled. Yeah, just looking for that continuation short. First thoughts, seeing the ES chart, 1 hour time frame lined up as well. Then I marked out the fair value gap that I'm going to take my entry from. Yeah, and that's basically it. I mentioned that I'm going to hold until the previous day's low, but I didn't end up holding. I was content with that 1% profit on that account. So really do check that out if you have access to it. I'm also making sure, like for example, yesterday during the PM session, because the AM session live stream was we sat through it watching Seek and Destroy. So I decided to come back for the members during the PM session. And right here, right at 7 p.m. my time, I mentioned this potential PM session 2022 model. And I also tagged the VIP members. So if you trade during that session, just keep an eye on it. Of course, there's no guarantee for a 100% win rate. No one can guarantee that. But over the long run, it's going to play out. So far today and yesterday, we had a nice winning trade. So yeah, basically, market structure shift, higher high, higher low broken, inversion fair value gap. I entered with a market order. And once we retraced, I even added a second contract right here. So you could have gotten in on the breaker block, inversion fair value gap, whatsoever, maybe something on the 1 minute. That's up to you. I marked out initial targets and then talked about, okay, taking a partial here, stop at break even, partial secured after 10 points, letting it run. I wanted to let it run all the way into the sell side liquidity that I'm targeting today, but just before those last 10 minutes of the PM session, I decided to close it before we had this pump, and that's basically where we're at right now. Let me put Discord on my second screen again. Seems like we're getting some sort of a little retracement. Now that's where we started into the new day with that little consolidation and then that break lower. 920. So let's see, I'm still in that short. I want to see if it keeps on respecting inefficiencies being left behind. My stop right now is above this high. Not really here to risk much prior to the New York Open. That's a volume imbalance. And right here we have a bearish value gap. We have 4 minutes before we get any confirmation if this bearish value gap is going to hold price or if we're going to close above it. A close above it wouldn't really be ideal, but like I say so often, we are not really afraid of the wicks. We have a safety stop loss in place just in case we get a big fuck you wick, basically. That's how I like to call it. And if that happens, yeah, well, we have our safety stop loss in place, but that's maybe the case on 1 out of 10 trades. Let it be 2 out of 10. Most of the time we can exit early if we see something that doesn't go according to the plan. And I'm also only doing that on the S&P 500 futures contract. Trading a take profit trader challenge and a funding pips challenge from my phone. I think I said it yesterday during the stream as well, that 50% discount on the take profit trader accounts ends on Sunday this week. I picked up two 50k accounts for, I think it's $85 with the 50% discount each for a 50k account. And actually, if you pass it, you get another 50 account challenge for free. So I couldn't resist from that offer. And I also need an account that I want to trade, yeah, in front of you on the live stream. Might be a little bit better than paper trading, because then I can actually earn some money during that. I don't like to have MT5 open, so I'm also at the same time trading a CFD challenge. Where are we at? So I'm trading with funding pips. Now I don't have to bring that up. The links are in the video description or on the Discord if you want to support the stream. I would really appreciate that. And yeah, funding pips because they have the lowest spreads. And because I have more room to breathe, I can risk a little bit more, set wider stops and all that stuff. But I don't like to execute on my main screen via MT5. My phone does a good enough job. And I'm also a little bit quicker because I don't like switching between TradingView back to MT5, back to TradingView, back to MT5. I focus on my futures chart right here in front of me on my main monitor. And now I'm going to also execute on that take profit trader challenge. And in the background, I'm also trading my 50 and 100k account with funding pips. Yeah, that's basically it. And if you have any questions about that, feel free to ask. Candle is going to close in 9 seconds. Just had a kebab for lunch. Oh, I was so good. Ah. But about kebabs, it depends in which country you eat them and yeah, from which shop you're buying them from. Very much so. In my opinion, I don't know. That might only be a thing if you're from Germany. Kebab doesn't equal kebab. There can be a huge difference. Volume imbalance, we kept respecting that bearish value gap. That's nice. That's the last 5-minute candle before we get a new 15 and 30-minute candle within the cycle. Retested, rejected, 15-minute volume imbalance. I would like for that to remain open. We will see. Like I said, my stop is going to be right up here, not risking much. I didn't talk about that yet, why I specifically entered here, and we still have 3 minutes to go, so why not do that? I entered here because I also entered right here. I don't know, I think the similarities are obvious. We have that equal low sell side. We have that equal low sell side here as well. We tapped it and moved away quickly. Leaving behind a bullish fair value gap. Shifting structure here, at least a break-in structure. Same thing here, marked out with this red line. Also leaving behind a bullish fair value gap. And yeah, because my bias is bearish, I didn't fade my bias, and I wanted to see either confirmation for price really showing me it wants to continue higher, or invalidation of this fair value gap. And I got that invalidation right here on this 6:20 p.m. candle, and it also opened up with a nice bearish volume imbalance, and that's basically exactly what I saw right here. We close below the bullish fair value gap, we open up with a volume imbalance, and I have sell side liquidity below that I'm looking forward to target. So I hope that makes sense, and like always, if you have any questions about that, feel free to ask. Not sure if I have shown it on YouTube yet. Yeah, I did. Let's take a quick look at NQ to see what NQ is up to most recently. Hmm, 2 minutes to go. Do I want to stay within that trade during the New York Open, or do I want to put it to break even? I'm not really a fan of holding through the New York Open. You only catch me doing it on the rare occasion. And that's also why I kind of don't want to be in a trade during the New York Open. Theoretically, market structure is bearish. We have inefficiencies to be respected, but the New York Open can be a little bit more volatile. Check out 1 minute time frame. Now let's see. Funding pips account is in profit. Nice. 30 seconds to go until the New York Open. Paddy, it looks like it. I'm going to hold for the market open. We'll see. I mean, I'm not exposing myself to much risk here. I'm not giving it more than a 2-point stop. I want to see it continue off this bearish value gap. Depends on the close, of course, as well. Stick to my bearish bias. See where it takes us. Either to a $100 stop or 10 points in profit. I think that's a healthy risk to reward. So this is the trade right now. I'm going to mark out the 5-point mark, moving my stop to break even. Take a quick look at NQ. Also took the low. Just protecting it right now at break even. Don't want to see rejection from the low of the day. Minimizing the risk. I'm still in that trade on my funding pips account. Looking for the sell side. And that's our trade from the London session. Market open. What are you going to do? I think I secured that one after 5 points, yeah. And the other one right here. What are you going to do? Let's see if you have any questions on YouTube. Nope, does not look like it. At least right now. Guys, feel free to ask and engage. I would really appreciate more engagement. And also that like button on YouTube. That really shows me that you guys are interested in the free live streams that I'm now going to do twice per week, every Tuesday and Thursday. All the other live streams, Monday, Wednesday, and Friday, are for VIP members only. Nothing new here. I think we hit the 5-point mark. Yeah. Take a look at if NQ is doing something similar. Yep. Most certainly looks like it. Gonna protect my trade if we go back above this candle's high. We have 1 more minute left within this 5-minute candle. We could zoom out and look for fair value gaps on this price leg. Not really sure if there is even one. Now, on a 5-minute time frame, that has been delivered very efficiently. No fair value gap here, no fair value gaps here, nothing for me to draw up. Where we're at here. Yeah, perfect. Let me modify my stop loss on the funding pips account. Or maybe take a partial. Partial has been taken. Stop loss is at break even on the funding pips account of this entry right here. That account is in nice profits. My overall take profit target Well, not gonna lie, I could see it down here at 4743. I could. Doesn't have to happen, of course. That's why I secured profits with the stop at break even. Right now, all the information we have is it's respecting bearish order flow, formed a new low of the day, and we have sell side below. That NQ has already cleared yesterday, and that's all in line with the 2024 outlook that I shared with the VIP members on Monday, yeah, right after New Year's Eve. Basically, where I said looking for a low resistance liquidity run to hunt all these stops. Buyers are trapped. Where's the analysis? Let me put all that in here and hide it quickly. And also hide. Nah, let's leave that. All this 1 hour analysis. Looking forward to revisit this unfilled 1 hour bullish share value gap. We also talked a little bit about the IPTA pricing range. This is the 20-day on a daily time frame IPTA range low. New quarter, new year. I think that was a pretty obvious target, which has been confirmed with that first short entry or signal I shared on the Discord right here. If we drop that to the 5-minute time frame, right over here. Those 3 pushes, 3 drives pattern into the high of the day, right here. We took out Asia buy side. We had this new year, new day opening gap left behind. Inside that 1 hour bearish share value gap we were just looking at. SMT divergence with NQ. And we jumped on this trade once we saw that bullish order flow is not being supported. Don't really remember where I jumped on it. Right here, we still kept on respecting the bullish share value gap right there. Then we left behind this bearish one, and this was the change in state of delivery for me. Right here, the shift in structure, or basically this one. Once we close with this candle here at 4 AM, a new hourly candle, below volume imbalance, below bullish share value gap, and below the bullish share value gap right here, holding this bearish share value gap, we tested it, we wicked into it. This candle said it all. Good enough to take a entry with low risk, high reward into that new day opening gap, or new year, new week opening gap, whatever we want to call it. This was yesterday's short setup. Let's take a look at NQ. Is NQ okay? NQ is pushing, but also I already mentioned it inside the tape reading channel on the Discord that there's potential for seek and destroy, similar to what we saw yesterday. We had yesterday's drop was a little bit more aggressive. I mean, we can measure that out all the way from the high to the New York Open low, 50 points. But we had a big London range, and that's why we saw consolidation or seek and destroy, taking highs, taking lows during the New York AM session, and kind of similar to the range today, pre-New York Open, 30 points drop. But we didn't hit a major sell side objective yet. We only hit that previous day's low. And so far we are holding below that, respecting bearish order flow, and by that I mean bearish share value gaps. Right here, partial. Nah, should have used a proper line. No questions here. Let's see if we have any questions on YouTube. Let me refresh that. Thanks for the likes, guys. I really appreciate it. Let's see if we can hit 10 likes on that stream. And like always, I don't want to push you to ask questions, but please do ask questions. Talk to me. It's much more boring if I just keep on talking to myself, believe it or not. Check out the 1 minute time frame, no fair value gaps here, but we're going sideways and I'm not really a fan of that. That's why my stop is already above the short-term high. Now we're back inside of that bearish fair value gap. Yeah, of course, I also understand that. I guess you kind of get used to it. Let's take a sneak peek at what NQ is up to. Interesting. Like always, waiting for some sort of confirmation, invalidation around this bearish fair value gap. We've tested it 1, 2, 3, 4 times. Now we're entering it for the 5th time after rejecting from it, forming a new low of the day. Gut feeling wise, I'd say it's very likely gonna be broken. Just from experience, I'd say screen time. Why come back if we already filled in the inefficiency and moved away from it? But of course, I welcome it with open arms if it wants to continue lower. Guess I got lucky here. Only one tick between me getting stopped out and very likely a little bit annoyed that I didn't put it at break even. I mean, who cares about these 12.5 bucks for that single tick? That usually just leads me to, well, used to at least, trigger some sort of FOMO because I've been on the right side and now I see it playing out, but I'm not on the trade anymore. Where can I jump in again? Where can I jump in again? Of course, it's nice to at least make a little bit of profit, but to maybe cover commissions. But it's just really annoying if you get stopped out because of that and your break even, your exact break even would have never been hit and it actually continued your way. And I try to avoid upsetting myself as good as I can. So for that reason, two ticks, 3 ticks, actually $37.50. Let's take a quick peek at NQ. NQ retested the VWAP. Yes, is holding that bearish fair value gap nicely. Fady, I know exactly what you're going through right now. So for everyone on YouTube that's not chatting with us on Discord, with the members, Fady asked a really good question. Thank you for asking that question, first of all. Don't want to put you in the spotlight or anything. I mean, we all go through the same, we all walk the same path. We're not that much different. We're all human beings with emotions. Now that I'm trading on a PA live funded account, I find myself hesitant to pull the trigger, afraid to lose capital. Any suggestions? I certainly can tell you what helped me, and that's blowing that account. As stupid as it might sound, because you tend to lose the fear of it if you actually blow it, because that's your fear. You're like, I don't want to lose, don't want to lose. But losing it and realizing, well, I really don't feel much of a difference. Of course it's gonna suck once you lose it, but next morning you're gonna think about it like, all right, that's interesting. How can I improve? What can I do better? It's tough. So that's certainly what helped me trading on those live funded accounts, on that PA account. But of course, that's not the advice you were likely asking for. How do I get blowing that account? That's not the best advice. But let me think about that a little bit before I answer that question. How would I go about getting rid of the fear pulling the trigger on the live funded account? Not looking at your PL if you're too attached to your account balance. So for example, not opening your rising and falling account balance like I have here, for example. That's one advice. Maybe going to your trading view settings and heading over here to trading and changing this to ticks. And I get it, because I found myself missing out somewhere, but happy that I didn't blow it. Like, yeah, exactly. And that's usually why traders on a funded account actually fail, because on the good opportunities, they are too hesitant to actually pull the trigger at the right time, at the right price. And that's 99% of what profitable trading is all about. Being there at the right time, at the right price. That's really all it's about. And when that moment comes up, if you're hesitant and you decide not to enter because you're afraid, that's the main reason, then, well, you're gonna see it move in your direction, and you're very likely gonna take a stupid decision and try to jump in on it, because your assumption was right and it could continue lower or could reverse from here and could continue higher. But most of the time, it's not the ideal entry that we initially wanted to take. What about the actual issue? Well, advice that I would have liked to hear when I faced that issue would have been trying to focus, trying to find your inner peace while being in front of the charts. And that also doesn't work for a consecutive amount of hours. The more time you spend in front of the charts within one session, the harder it will get to really find that inner peace. Trading really isn't about, for me, it's like an art. Like, for example, a professional baseball player. He doesn't think too much when someone is throwing the ball to him or at him with super high speed. It's an instinct. It's like a soccer player in front of the goal before he shoots his shot. He doesn't think, oh, okay, in which angle should I shoot? It's intuition. And that's the exact same thing with trading. And hesitation, fear, and greed block that intuition. You gotta get into that state of just doing what you do best without thinking about it, being calm and relaxed. And if you realize you're not calm and relaxed anymore after you took your first loss, then stop. Come back once you are again, maybe the next day. You don't have to make it back on that same day. Exactly. It's all about the trust. Trusting your intuition. Let's take a look at NQ. I hope that helped. Yeah, I have the new week opening gaps on my chart. Let me check the ICT all-in-one. I think I'm displaying the most recent 3 or 4. Let's do 5 new week opening gaps. We have one right here. This week's new, refresh the indicator here quickly. But I'm not the biggest fan of having too many new week opening gaps on my chart. Most, let's say, the most recent 4 or 5 should really be enough. No worries, Fade. That's what I'm here for. I'm not here to show that I'm good and you copy my trades. It's for that little bit of advice that you need at a certain stage of your trading journey, in my opinion. Sometimes we as traders forget how similar our issues and mistakes are most of the time. Of course, it might have a different reason why someone is afraid of taking the risk based on childhood trauma or growing up in a low-income family or high-income family. The reason why might be different, but the journey, the different barriers you have to climb above to continue forward, 90% of them are the same. Eventually you're gonna pass your first challenge. You start out, gonna blow a few challenges, you learn from your mistakes, take some good advice on your journey, and you continue. Okay, now you're on your funnel account and you realize, I just made it to first base. Now I'm trading on my funnel account and it scares the shit out of me to take risk. That's exactly how I felt. And you would have to, in my opinion, be kind of a superhuman to not feel that way. Or a computer. But eventually you're also gonna progress through that. Learn from it. And that's basically the milestone of achieving your first payout. And you might think, oh, finally I got my first payout. But trust me, it's not over yet. If you want to do this as your full-time job, it's never ending. And that's the beauty of it, in my opinion. You have to love it. If you don't love it, eventually you're gonna give it up. Because it might be too much stress or too hectic. It has to fit your personality. Now that's just my piece of advice. Try to meditate, read books, and just make sure you're entering the trading pit or your office chair, whatever it might be, peaceful and relaxed. Don't rush into a New York AM session or London Killzone, especially as a beginner, after you just had a argument with your missus or your girlfriend or your wife, or because you had a bad day at work. You're gonna carry all those negative emotions onto the chart, trying to make it up. Prove that you're better than that. Let's say you made a mistake during London. Happened for me, certainly. I want to prove it to myself that I'm better than this. I always had that London session losing trade in the back of my mind, hindering me to really unleash the full potential during the New York session. Is it possible to have a girlfriend if you are a trader? Good question. Good question. I don't have a girlfriend. Right now, at least. I'm happy. I think it's all about being happy. Some people need it. I can confidently say that I don't need it. Of course, it's a nice to have, but it's not a must have in my opinion. Alright, looks like we're dropping and we hit our 10-point target. Nice. Yeah, Bongo Rambo, I definitely agree with you. It's initially when, I mean, I'm not gonna take a new trade anytime soon. Let's see what happens on that new hourly candle. But I like the little trader talk, and I really appreciate the messages. It's all about starting to trust yourself and not activating your emotions. When I started with initially cryptocurrency trading, but I gave up on that. I'm only holding, and for the long term or mid to long term, sometimes short term, it depends heavily. But I'm not scalping. I'm not entering trades with a 100x leverage, hoping that Bitcoin is gonna drop $100. Not anymore. And then I eventually stumbled upon automated trading, bot trading, because I already encountered the issue, which was me being emotional. And that's why selling bots, selling automated trading packages works, because eventually every trader who is going on that journey is going to face the issue of dealing with his or her with the emotions. And then the easiest thing to fix that issue for a beginner trader is to think, if I would let a machine do what I do, then all my problems would be fixed, right? So let's just purchase a $5,000 indicator from someone I heard about on the internet, and all my issues will be fixed. I will be a millionaire, according to the website, in 1 year, maybe 2 months. I've also been through that, and then lots of indicators, and then I stumbled upon ICT, but still trying to force a very specific model, like for example the 2022 mentorship setup. It worked, but I still was the issue. I wasn't really confident in myself and my own abilities until I really decided to trying to develop my gut feeling and building that self-confidence. And eventually, if you go down that road, you're also gonna find some hurdles. Oh, what's happening? 10 a.m. Do we have news? Did I miss anything? Well, stop's already in profit at break even. That's interesting. Well, oh, this cracks me up. Who caught the perfect low to the tick. We would have been beep 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 in the ass. My stop was right here at break even. I knew there was something up. Yeah, okay. Khalid, I'm not holding for news. Oh, well, on my funding pips account I am, but I already took an entry up here on this volume imbalance. So, yeah, but accidentally. Didn't do my homework today and checked the news schedule. But lucky, I decided to just target 10 points. Well, almost. Orestas, I know you're likely referring to Dodgy's strategy. I mean, it's all about finding your own style and what makes sense to you. Because I also tried different approaches from different traders I found online. And, well, eventually I found success in my own approach being put together from all the different things I've learned. And that's what I think is one of the most important things. It has to make sense to you. It might not make sense to a support and resistance trader, what I'm doing here, or a indicator-based trader, but that doesn't matter. If they find success or consistency with their approach, I would understand it because I came from that camp basically, but for me, it makes perfect sense why price respected this bearish fair value gap and continued lower, or why we continued lower after not holding this bullish fair value gap. That's actually why I entered here on this bearish volume imbalance. It really has to, yeah, make sense in your own mind. At least, I don't know, I'd say with the kind of approach that I'm trading with. And yeah, to get back to your initial question, I would say, where I can only talk about myself, I don't like limiting my opportunities down to just one very specific model. For a beginner trader, I'd say it might be helpful because you put all your focus on one specific pattern, not engaging when price is doing something sketchy or random maybe even, and just engaging when the opportunity is there. Like, let's say, for example, a 2022 model or a SilverBullet setup. Building that discipline. But for myself, no, I wouldn't just limit myself, because otherwise I would miss out on opportunities left and right. And I'm at that stage where I can confidently say that I don't need to limit myself. And about the specific inversion fair value gap strategy you're talking about, yeah, I think it's a good strategy. The more confluences you have, the better. Sometimes all you get is a inversion fair value gap because we snap away from a specific area. Where do we have an example for that? Like, for example, yesterday, a little inversion fair value gap right here. We close above it. We hold support paired with a new weak opening gap. We snap away, open with another bullish volume imbalance, and at that time, you don't really have to worry. Price is already moving in your favor, managing your risk. Well, yeah, nothing you have to worry about. Inversion fair value gap right here. Yeah, I'm a big fan of combining confluences with each other. Also to estimate the amount of risk I'm putting on a specific trade. Alright, looks like we're pushing. Thought taking that low, but I appreciate it. S&P. That account is done for the day. Let's see. If you are bored, maybe you could look at oil. My idea was buy at London with New York to continue. I took a bit of heat. Could you tell me where you would have bought and why? Sure, I can take a look at oil. Take a quick peek at NQ and see what news did to NQ. Also pushing CL. And let me get back to that question and see what you asked. Maybe you could look at oil. My idea was buy at London. Let me copy the indicator. No idea where London is. No, we don't need an indicator. Wednesday, 3rd of January. If you're about maybe, my idea was buy at London with New York to continue. I took a bit of heat. Could you tell me where you would have bought and why? Bigger picture. Let me go to the hourly time frame, see if we took some significant sell side liquidity before we pumped. That's low right here, but nothing really crazy. I would have liked to see, for example, a low like this being taken before. I'm also not in tune with oil. I really have to admit that. Not trying to sell the image that I know what. I have a really good feeling about how ES is going to move, because I've been trading only ES for a long time now, and I really got to know my dance partner. H. Smith always makes that reference, getting to know your asset. So if I'm switching between charts, I can't do that. But, well, in terms of where I would have entered, this is a London Killzone beginning at 2 a.m. The market opened up at right around 6. We have our high of the day here with this 8 a.m. Asia open pump and dump. Continue lower. We have relative equal low sell side right here, and we move below that before the London open. I think we do, yeah. We continue lower. Retrace, start to hold the bearish fair value gaps, continue lower and lower and lower. If you already had that bullish bias, well, I think that's not really hard to tell. Kind of have this sell side of the curve, and then that period of going sideways. Basically accumulation, manipulation, and distribution. And the point in time where I would have been very confident in holding my short would have been right here after this market structure shift. And it's also, yeah, a powerful market structure shift. This happened within 15 minutes. 15 minutes, we moved up. I don't have a good reference for oil, what it typically moves like. 88 ticks here to the upside, leaving behind a bullish fair value gap. We could look at this as our breaker block, these up closing candles here on a higher time frame, old resistance being turned into support. And then simply follow price. If I see, okay, this is a pump and dump, we pump up and immediately close back below here, maybe take off some risk. But stop loss should have been fine below here, especially if you already had a bullish bias. But if you would like to wait for the confirmation, so this would be your market structure shift anticipation entry for the accumulation, manipulation, distribution. Trapping shorts, reversing it very quickly to the opposite direction, would have been right here on this bullish fair value gap. We break above the high, so at this point in time we actually have it confirmed. We formed a lower high, lower low, higher high, higher low, higher high. So now I'm really just looking for that bullish order flow to continue, and if I see it stopping immediately, I'm simply closing the position. Continuing higher, holding support on down closing candles, paired with a bullish fair value gap, taking out our high of the day here from the Asia session with this push at 730, leaving behind a new inefficiency. Might be a little bit of a risky entry after taking out the high of the day, just taking a long of this fair value gap, but you can manage your risk fairly easy by taking your entry right here or at the 50%. And once we see the close below, we exit the position. I'm not sure how precise oil is. If it's maybe a little bit too volatile, that's also the reason why I don't trade NQ. But just based on that, accumulation, manipulation, distribution within a market maker buy model. 2022 model at the low, and from here on, just respecting every base we've left behind. All these old highs have been referenced as support later on. We consolidate, we push above, and we hold support on our down closing candles. We push above, and we retest our old high. We continue to go higher, likely with some news, hunting more buy side. No worries. Oh, wow. Interesting. Almost forgot I'm in that trade. Well, not in this trade. That trade is already done. But I'm still in my trade right here. And I actually didn't take profit yet. I already took a partial. That trade is done. Kept respecting our inversion fair value gap here. Retested the VWAP and said goodbye. In terms of potential entry right up here. Well, personally, I wouldn't have entered on that short. Didn't see the, maybe on this volume imbalance. This would have been a tiny super scalp here maybe. But I try to, yeah, stay away from that a little, as good as I can. And like always, if you have any other questions, for example, about the analysis I did on oil, of course, that's hindsight talking now. But I think at this point in time, low of the week, low of the day, I think with, well, maybe not confident, maybe not with the most amount of confidence, but we would have had that feeling that, okay, this might reverse now at this point in time with this quick movement here to the upside. Okay, we have our first initial sign of a market structure shift. All right, let's see what happens. Maybe go to a higher time frame, mark out buy side, or that buy side being left behind. All right, did we see that displacement with momentum? Yes, we did. Within 3 candles, we took out all these down closing candles. And on a higher time frame, let's maybe even go to the 1 hour. Now 1 hour wouldn't show that. A 15-minute. Close above the bearish fair value gap, unfilled volume imbalance. We leave behind a fair value gap. Stop loss. Take profit target at the high of the day, or simply choosing a 2-to-1. And then we just wait to see if we get some early invalidation of our setup. And we consolidate, we tap the fair value gap and see a nice rejection wick. Okay, we're still consolidating. Okay. Could still work out. At least there's nothing going against our potential long setup of our fair value gap paired with the market, with the 2022 model. All right, this would have been a point in time where you likely would have been a little bit worried. But 5 minutes later, you get the immediate relief. All right, starting to look better and better. We take out the high, have a nice up closing candle. At that point in time, we should be pretty good. We could trail our stop loss to minimize our risk. Let's see. Continue up higher, leaving behind new inefficiencies. That's a good sign. If you like to add to your winning trades, you could add on those fair value gaps, for example. Nice, we still keep holding that highest bullish fair value gap. That's a sign for good bullish order flow. We continue to push. Closing prices are going higher and higher. Nice bullish engulfing. Order block. Continuation. Okay, we're likely reaching for that buy side now. Still nothing to worry about at that time. Take a partial, move your stop to break even, protect your equity. Have a nice fair value gap. We tap that and continue to go higher. At this point in time, there's no doubt in my mind that we're going to hit this buy side and potentially the high of the day. Really taking it one step at a time. At this point in time, okay, close right at the low of the fair value gap. Looking at this bearish candle, down closing candle within an uptrend to hold us as support. See if that works out, or if we're gonna start attacking some lows. In this scenario, we would have already secured some partials, or at least we wouldn't be exposed to any amount of risk. Moving our stop to break even or in little bits of profit. All right, we kept respecting that fair value gap. Up closing candle, and okay, starting to look better. Done. Not sure if we had news around that time, but you see that it doesn't affect that prices following the order flow, the algorithm. It just makes sense to me why price is moving up here. And that's how I could write a story about how oil moved from 69.28 up to 70.85 if someone would ask me for a report card. I tapped this fair value gap and we saw this placement, and then it continued to climb with a little bit of consolidation, but kept on respecting bullish order flow via inefficiencies, continuing to go higher. At this point in time, you could either leave a runner with your stop and profit, seeing if it might want to continue to take out this high. And for invalidation, I would simply, like always, refer to bullish fair value gaps being respected or not. Yeah, I tend to go in too early because where did you get in? Just let me check the S&P here quickly. Drop it. drop it, S&P. Well, yeah, simply wait for, if you have your daily analysis and areas where you want to see exactly these things from that change in the state of delivery, that's your change in the state of delivery right here. And you see that crystal clear confirmation for that change in the state of delivery. As traders, we're always looking for something to change. That's where best opportunities are being presented most of the time. Okay, well, something is changing here. Someone started buying, or something, some entity. Interesting within 3 5-minute candles to immediately displace here, leaving behind bullish inefficiencies, filling them, continuing higher. And before that, we didn't really see that similarity, that we didn't really see bulls engaging with price. Yeah, we had a little bits of pullbacks right here and right here, but nothing compared to this. Of course, in hindsight, you didn't know this was coming at this point in time, but we also then had a nice market structure shift. So I would simply suggest you to do your daily analysis, especially if you really trust it, and then look at the specific levels that you have picked out from a daily time frame, weekly, monthly time frame, to look for reactions like these right here on the lower time frame. That really validates. Let's say we would have had a major sell side liquidity pool below this line. We take that and we immediately bump back into it, and you're like, okay, that's my crystal clear confirmation for even a little bit more risk. Let's say fine line bongo rumbo, what you're asking, because if you're too not patient enough to wait for the lower time frame to actually present the setup while doing your higher time frame analysis, and being too patient, potentially missing out. It's a very, very fine line. And you're just eventually gonna have to find that spot where you feel comfortable enough engaging with price. Let's see if we have anything on YouTube. YouTube. Nope, nothing new on YouTube. No, I did not want to open Telegram. Force quit. Thank you. Take a look at NASDAQ. Looking similar. I Even forgot that I'm on a 1 minute time frame. Still looking forward to see the sell side liquidity being hit. Then it's just a matter of price delivery. If I see price closing above this bearish share value gap, already be my first concern. I might start to take some more profits from my entry up here. Or maybe even close the trade entirely. But so far I like that nice rejection of that 50% level. Yes, definitely. Just practice that over the next 1 or 2 months and see if it works out better for you. Buying the exact bottom. I think it's worth more to be a little bit more patient for price rate to confirm, and then use a little bit more risk than you would. Let's say, for example, I would predict that price is going to reverse from here. I wouldn't confidently use as much risk as I would use if I would see a 8 out of 10 setup here on a lower time frame based on my higher time frame sell side liquidity pool that has been rated. So this way I might not catch the very bottom, but I'm still, or maybe even make more profits than I would have catching the bottom, because I can use more risk more confidently. What was the PD array on the 5 minute you looked at reacted from? See a one chart to have to change in the state of delivery. What was the PD array the 5 minute you looked at reacted from? I mean, initially I looked for a major sell side liquidity pool, but I couldn't really find one. I mean, we could have used any of these lows of this uptrend, but the PD array it reacted from, I'd say breaker block paired with bullish share value gap. That's where it reacted from. Down here, God knows. But I don't know, I don't have to exactly know why it's reversing like it did from that exact point. That's a good thing. I mean, yeah, we took out some hourly lows, but not the major swing low you would be looking for to be taken at a later point in time and then reverse. And then if you already have a higher time frame bias, like Rambo did, then waiting for that confirmation, that's all you need. Paired with the accumulation over here, the manipulation, and then the potential reversal / expansion to the other side. Let's see if we've got a new question on Discord. Yeah, I feel you, but at least you're already aware of, I don't want to say problem, but you're not really wondering about what's your biggest issue or from that message. I'd say it's also part of a ego issue. Not issue, but you know what I mean. I mean, we all have that sometimes. Like, I want to be the best trader today. I want to post that biggest trade all over Twitter. Or I want to, share a screenshot to a Discord community where I bought the literal bottom. Yeah. But it's not really necessary. It doesn't help you, and very likely also not others, because they might just start to compete with you, making more mistakes than they really should, or at least not sticking to their plan of where they're going to take profit. And yeah, the only benefit you get is a bigger ego, which is not really a good benefit, but yeah, maybe a little emoji, a fire emoji. Oh yeah, you did so good. Wow, I received 10 fire emojis or 100 likes. Now everybody thinks I'm the best trader out there, because this one time I bought the exact low. Any other questions? We're still respecting that bearish fair value gap. That's nice to see. I'm still looking forward to maybe see the delivery down into 4743 between 10:30 and 11 a.m. We'll see. Stops protected on my Funding Pips account. Take profit target is set. Not much I have to worry about, so that would be the time where I can answer some more questions or take a look at a few different charts. Yes, Anakin, I am German. No worries, Jerry. CL continues to respect bullish order flow and continues higher, but yeah, certainly the higher and higher it goes, the more risk you're potentially facing taking the highest fair value gap as a potential long entry. That's something you would like to see if you're still in a long trade. Is it still respecting the bullish order flow? Yes. Don't have to be worried. Yeah, there are not many Germans. I only know of one who's also doing it publicly. Greco, I think his name is, yeah. 5, 10, 15, 20, 25 minutes of basically doing nothing. What does it look like on the 1 minute time frame? I'm usually not the biggest fan of price consolidating below a sell-side liquidity pool. I don't mind if it consolidates a little bit above it. That's most of the time just a confirmation that they're engineering some liquidity before continuing lower. Similar to here, making it look like it's going to attack that low, get really close to it, snap it away, pick up some more liquidity, and dump it on them. Trap shorts and longs and make profit both ways without having taken the sell side. After having taken the sell side, well, I'm certainly glad that we left behind this bearish value gap, because I can use it to invalidate my idea that we're going to continue down to the 47.43 levels, to that rough area from my entry up here. And this would also be our daily sell side drawn liquidity. If we take a look at the daily here, that's where we are at right now. This would be our market structure shift confirmation, if we want to call it that, below that exact level. So what would be the easiest way to deliver into that? This fair value gap. If it invalidates and shows more strength, some signs of bullish order flow, maybe respecting a couple of bullish, newly bullish fair value gaps, that's where I would just say, no, good enough for the day. I'm going to take an exit somewhere around here, still in profit. I already secured profits on that trade. Stop is right above, yeah, right here at that previous day's low at 4765. And the final profit target is sitting at 4744. No, I'm lying. I'm really glad I just checked that. It isn't. No, it is. No, he doesn't trade ICT. He trades himself. And I'm kind of doing the same, but also a little bit different with ICT. I trade what makes sense to me, and so does Krakow. It makes sense to him, but otherwise he wouldn't be taking the trades he's taking. I think he's approaching it in a very efficient, smart way. He's already got a lot of capital, lots of payouts. And at that stage, you don't really worry about blowing a 100k challenge for 500 bucks. If just last week you got your payout of 15k or 50k, who knows? You can then just play with prop firms and leverage them as a opportunity. And that's what he's doing. I like to say that I'm combining ICT with common sense and, yeah, stuff I just picked up over the years. So I'm not, again, sometimes calling a breaker block old resistance turned into support, a old high that's now acting as support once we break above it. Or if I see a crystal clear head and shoulders setup, which essentially looks very similar to a 2022 model. If this is our head and shoulder setup, our left shoulder, our head, our right shoulder, our left shoulder, and our head. This is basically the 2022 model. But of course, it doesn't always look that way. Sometimes all we get is that left shoulder, our head, and the right shoulder, and we do it from down here. The market structure shift happens over here. I'm already looking for longs down there without that market structure shift confirmation, which would go against the trading plan if I would only force myself to trade this. If I see this happening around a low of the month, low of the week, after we just took major sell side on the higher time frame, I don't really need that confirmation. So does an ICT. Yeah, so I said, yeah, 70% ICT, 10%, 20% common sense, and last remaining percentages, I'd say, would be trying to think like a market maker, like the opposite side, what they're likely up to, where the money is at, who's being trapped, are longs being trapped or are shorts getting trapped, because they all have that, they have all that information, and it would be silly to, yeah, not take advantage of it. They know exactly how they have to move price around to trap longs and to trap shorts into the market, hence free push pattern to both the up and downside. That's very likely. If they didn't get in on this push or this push, the most likely area where retail traders are going to jump in because FOMO starts trigger, and then they trap all these traders long, reversing it on them. And this combined with ICT stuff and yeah, a little bit of common sense and all the stuff we've learned already on our trading journey is basically what makes up my trading plan. No new questions. How much time do we have left? 15 minutes. Well, I'm gonna stick around for sell side to be hit. Well, maybe. If we don't get many more questions, I don't really have much more stuff that I can think of right now that I can talk about, unless I don't know, get asked a specific question. We talked about oil. We talked about, lots of stuff today. So far the best trading day of 2024. But we don't want to get ahead of ourselves. Already halfway there to pass the Take Profit Trader Challenge that I picked up last night. I took the short right here, the short during London. Both of them I shared on the Discord. And this one that I just took before I started the live stream. And on the Funding Pips account, short right here, still holding on to that. Because why am I doing that and why am I trading so differently on my, like basically what you see on my chart here? It's because I have much more room to breathe with CFD challenges. Let me show you what I mean. I already talked about that in one of my comparison videos, but let's say, for example, with funding pips. I've traded with many CFD funding firms. And so far, funding pips turns out to be my favorite one. I compared all of them, comparing the spread because I only trade the S&P 500. And funding pips stood out with the best spread, lowest commission, actually 0 commission, and also the cheapest challenge. So I didn't mind trying that out and testing their service. But the main point is that I have a profit target, a maximum loss of 10%, and that's static. If I, for example, on my 100K account, if I'm up 5% and I lose those 5%, I still don't have to worry about anything because my max drawdown sits comfortably at 90k. I can lose 10 or 15 other trades before I have to get worried. With, for example, Apex Trader Funding, you don't have that comfort, in my opinion. Needs a little bit more patience, discipline, and skill, if you ask me, because you have a trailing threshold. And what does it mean? So let's use the same example. You go for a 100k challenge. Yes, it's a lot cheaper. You only end up paying, where's the price? 207 a month, and there's currently a 80% discount with Apex Trader Funding. So it's really, really cheap, but it also comes with a certain cost. And I think it's much easier to pass a challenge where, yeah, your max loss is always at 90k. For example, with Apex, your trailing threshold is $3,000. So let's say you start on your fresh 100k challenge, you make $3,000 in profit, and you happen to lose those $3,000, your account is blown because it's trailing. It's basically following you. Your max loss, your overall loss, is following you to the upside the more profit you make. And also with Apex, you have a live trading drawdown. So let's say you are in a trade like this one. Let's say you are in this short right here, and you keep on holding because you really want to see the sell side liquidity being taken. But because we already got so close to it, you move your stop to break even. So at this point in time, with one mini contract, I was $500 in profit. But then price quickly snapped away, hit my break-even level, and with Apex and the live trading threshold, this would actually be calculated as a $500 loss, because it's always calculated from your highest account balance. My highest account balance at this point in time would have been 50,500, but I didn't secure it. It snapped away, and I got stopped out at break-even, so it actually counts as a loss of $500 off your margin. You don't, for example, have that with Take Profit Trader, the company I'm currently trading with here. That's the trader weight integration. I also like that I can execute it right here where I already do all my analysis with the funding firm, and I don't have to open up MT5 on my computer. I don't really like MT5. It's okay, but yeah, I prefer just looking at one chart instead of switching between TradingView and MT5 the entire time. And charting on MT5 is just a pain in the ass. I think we can all agree on that. So both of these challenges, futures or CFD, have ups and downs, I'd say. The easier one to pass for a beginner, my opinion, certainly is the CFD challenge. Like, for example, funding pips, because you just have more room to breathe. Don't have to worry if you're losing 5% at a time or over time. That's why I can confidently hold on to a position like this, because even if it hits my stop loss, I'm not losing anything of my trailing drawdown that's being calculated with current price or with how much profit I'm in unrealized. And if I trade the the futures challenge, I'm always very quick to enter and exit if I see it going against me, because I don't have too much room to breathe. I prefer taking an even quicker exit, and then potentially, if I'm still right, entering quickly again. It's more sort of a scalping approach instead of I don't want to say I'm swing trading on the CFD challenge, but more mid-term holding. Any more questions on Discord or YouTube? Otherwise, I think we can wrap it up here. I'm just going to leave my stop right here at the previous day's low. That's already I don't have to exit now. I'm simply going to watch the chart and see if we keep on respecting bearish fair value gaps. That would be the easiest way to deliver into the sell side liquidity pool. We're not really far away from it anymore. Question is, okay, we are right here now. How could we deliver into here? Ideally, retesting or repricing a inefficiency in price, continuing lower. Of course, doesn't always happen, and we just continue to sell off and until we hit the sell side liquidity pool. We could even, just continue to drop because if we go to the higher time frame, there really isn't much in our way anymore. A huge inefficiency on the daily and on the hourly. This was my target, basically since Sunday. I mentioned it on the Discord, looking for some sort of a low resistance liquidity run to fill in this bullish fair value gap. What happens after that, I don't know. I will see and reevaluate this weekend after the trading week is over, see where we're at. For me, it doesn't make, as a lower time frame trader, it doesn't make sense to worry about or think about what's going to happen if we're down here, how we could get down to here. We first of all have to get through this, and once we've done that, I reevaluate and see what I can look for in a lower time frame. And same thing is what happened here on Sunday, right? 1 hour bearish market structure shift, a 1 hour bearish value gap. This week was kind of interesting here between Christmas and New Year's Eve. So that last trading week of the year, we had this major sell-off on Wednesday the 20th. Then we started to climb it up slowly, and I like to call it walking up the stairs. So right there, doesn't look perfect now. Let me start to redraw that. Walking up the stairs, slowly but surely. Taking buy side, trapping traders above the high of the year in 2023, consolidating, snapping it away from them, and then the new year is starting. So just based on that, bearish market structure, longs being trapped. I looked for the first sign on the lower time frame that signaled bearish order flow to me inside this 1 hour bearish value gap, and stairs up, elevator down. So I like to call it. That's usually when we see those low resistance liquidity runs, because all these traders here have their stops below each and every one of these lows, and market makers make the most amount of money, or make more money the quicker they are delivering price below these lows. If they slowly move price lower, consolidate over a couple of weeks, it would, those long traders, they would very likely start to second guess their long position, and they might close at break even or maybe close in profit, and that's missed opportunity for market makers. They make the most amount of money, and that's what they're in that business, to make the most amount of money. They're not in the business to make everyone else happy, or the other retail traders. They're in the business to basically take your money and take other investors' money. And the quicker they are in delivering price, the more money they make. So I'm not expecting this to drop down slowly. I'm expecting this to, being delivered within the first 2 trading days of the new year. Let's see where we're at. Oops, let me get rid of all these drawings. Oh, come on. Done. Drop it down to the 5-minute time frame. And once again, we are kind of going sideways, but this time above sell side liquidity. We rejected off this bearish value gap, so let's say nice to see. If we start to close above that, I still wouldn't long it yet, because therefore I would simply wouldn't have the confidence really, because we're not really far away from the sell side liquidity pool. If we would see what we see right now, after having taken that sell side like this, for example, and we start to close above this bearish value gap, I would maybe consider even taking a long target buy side above these short-term highs. But because we didn't, hang on, I really wouldn't look for longs, at least until we hit that daily sell side liquidity pool. Of course, we could get a short-term recovery before we continue lower, to really put the pain on short sellers that wanted to see the continuation immediately, but might have entered with a bigger position size, forcing them into margin trouble. Very similar to what we saw here. You would have assumed that, okay, lower low, higher high, market structure shift, bullish share value gap, this is going to reverse right away from here. But we didn't take out, or we really didn't take out that previous day's low at this point in time. That's why I didn't engage on the long here. I would have engaged if I would have seen, let's say, a bounce off here, a continuation higher. I would have taken that next fair value gap for the continuation. Very similar to what we saw here on oil. We talked about that earlier. If I'm not very confident that we're going to hold here, I'm simply not engaging, but I'm still ready to engage once I see the confirmation that this entire area kept on holding, confirming my bias and the overall idea. Looking forward to enter on that next opportunity. Let's wait for this last candle to close. It's 10:55, so that's going to be the end of the live stream. If you guys have any more questions, now would be the time to ask. I'm going to be back tomorrow on Discord for the London session tape reading with VIP members and the New York session live stream, but also only on Discord. The next free YouTube live stream will be on Thursday. Let's see if we have any more questions. Nope, not right now. Let's see, last 30 seconds of this 5-minute candle before we get a new hourly candle. Let's check what the hourly chart looks like. I would prefer to see a close below the low of the 21st of December. 15-minute time frame, no inefficiencies in this price leg. Same goes for the hourly time frame. So I would have to drop down to the 5-minute to look for inefficiencies, and I have 2 available. Like I said, my stop is right up here. Stop and profit, I already secured 70% of my profit around this area, where I also took my profit with the futures funded account. But I would still be waiting for this sell side to be taken before I would really engage in a midterm long opportunity. Maybe for a scalp, that would be okay. Let's say, for example, you entered with the market after we closed above this bearish share value gap, just targeting that next short-term high. That would have been perfectly fine. You would have successfully scalped 4 points, yes, but I wouldn't really, well, maybe leave a runner for the next buy side target just above this high. With your stop at break even, protecting it. I think this is starting to look, or at least it could be, a little trap. Engineer some liquidity before we hunt the sell side of the 20th of December. Try to get some buyers engaged that like to buy the perfect bottom before snapping it away. Similar to what we saw here and right here. Leave behind a bullish share value gap, shift structure, fail. Shift structure, leave behind a fair value gap, and fail. Maybe we see it for a third time today. But I'm not going to engage anymore on that. I think it's likely that eventually we're going to hit that sell side liquidity pool. We could end up engineering more liquidity. And by that I mean trapping more and more traders long before turning it around on them, so that it's actually worth it for the market makers to move price even lower, or at least worth more. All right. No more questions on YouTube. That's the last reminder. Let's check out Discord. Nope. All right. That's going to be the end for today's live stream. Awesome. We kept on holding through the New York Open. This was nice. Consolidation got out just before the 10 a.m. news event here, perfectly to the tick. Literally to the tick. Entry based on this volume imbalance. Same entry I took over here after failing the bullish share value gap, opening up with a new volume imbalance with perfect equal lows. We had the same thing over here, just looking a little bit different. And the initial London session short. I played with the thought of holding it all the way down till here, but yeah, we all have eyes for the eyes of a swing trader, but the patience of a short time frame 1 minute scalper. Most of the time, at least that's how I feel sometimes. I enter and where could it possibly go? Check the 1 hour, 4 hour daily time frame, but in the end, I lack in patience sometimes when holding on to a trade. Not on this one. I'm pretty confident on this one that we're gonna hit the sell side liquidity pool. Now we're just trapping a few more longs, and even if not, I already secured all my profits for today. I can only win. It's a win-win. If it hits my stop loss right here at the previous day's low, it's a win. If it hits this, it's a win. So really, I have nothing to worry about. Alright guys, that's going to be it for today's live stream. If you still have any questions or you come up with some questions later today, feel free to ask me on Discord. I'm around the Discord pretty much around the clock, unless I'm sleeping. So just ping me with @ethermed and I will get to your question. Alright guys, thanks very much for joining in, and I will be back on YouTube on Thursday. Also just before the New York Open, and all the other days I'm on the Discord server with the VIP members. Alright, take care and enjoy the rest of your day. Bye.